Welcome to Quantum Finance. My name is Parker. I am the head trader here, but I am not a financial advisor and this is not financial advice. So, in today's recap, we're going to take a look at the economic data, look at the overall market, and then we'll look at the trading opportunities and then we'll follow it up with some tweets and other things. So, today on the economic data front, we had the U.S. initial jobless claims come in better than expected. And that was really all the economic data we got today. So now we'll do our market overview. Starting here in the debt market, looking at the 10-year yields, just monster day for yields, breaking through that 4% level, getting continuation after the strength we got yesterday. As you can see, approaching this upper band here, getting close to this previous resistance here up towards this 4.2% mark. So now we're going to look at the dollar. The dollar, pretty strong day for the dollar today after coming down and wicking off that daily 20. As you can see, we're starting to get kind of squeezed here on the daily chart, still holding this uptrend. Wicking back above this weekly 20, but still kind of overall in the middle of this larger weekly range here at about this 105 level. Turning to the stock market, we have stocks actually getting a monster day today for stocks after 3 red days in a row. We're going to dive into this more, but this is really a monster bounce off of that 200-day moving average. And you can see here wicking back above that weekly 20 EMA. Yeah, you can see a lot of this strength too. We had been pretty oversold for a while to the downside, kind of sitting down here at the lower range of the stock RSI. Turning to cryptos, we have Bitcoin red on the day, but I mean, honestly, we're still just sitting in this range. I mean, crypto really hasn't done anything in 6 days, just kind of sitting here chopping around right here at the middle of this daily range here. Looking at commodities, we have oil getting its third green day in a row, getting continuation after the strength we had yesterday, holding above that daily 20 and working its way back up through the range, as you can see here, approaching this downtrend line that we have. Green on the monthly. So now we're going to look at gold. Gold here, not really anything today, just kind of a doji candle after wicking off that daily 20 there. Silver, red day for silver, kind of had a nice wick to the downside, but not a whole lot of action to talk about down here. Still below that midline there on the monthly chart. So now we're going to take a deeper look at the actual stock market today. We're going to start here with the S&P 500 SPY ETF down here at the 15-minute chart. So as you can see here, really interesting action after we got down below that 50 simple moving average, the daily 50 simple moving average. And as you can see, we actually gapped down and opened below that daily 200 moving average. So I know at the start of today, I was watching some mainstream media and a lot of people were kind of worried about if we really got a lot of sell pressure today because of us breaking this key technical indicator here. But as you can see, we just kind of consolidated above that 200 and eventually built up enough strength and got a very strong squeeze into the close, actually getting above that 50-day moving average. So it's nice to see this strength here out of the S&P 500. Looking up here at the 2-hour chart, you can see kind of us breaking this downtrend. We'll zoom out a little more here on the S&P 500. We'll take a look at this volume right here. As you can see on the day, just a lot of buying off that 200 level. To note that monthly is still below these key moving averages that are still bearish. But looking at the quarterly chart, I mean, you could see we just having a nice bounce off that 20. This 20 actually has been a very nice resistance going all the way back to, you know, this July, probably like, I'm not sure what year this is. Oh my gosh, hold on. I'm sorry. It's looking like ever since we got above it here in October of 2011, we have been holding that 20 quarterly EMA as support. So now we're going to turn to some trades on the day. You know, to be honest, looking at our list here, our scanners, because there was such a strong rip here in the S&P 500 and the Nasdaq, the scanners are going to be like pretty different. I mean, you're just going to see a bunch of rips going into the close. But when it comes to my strategy and how I trade stocks, I like to trade stocks that are gapping up on news or, you know, different earnings or whatnot. And today, actually, for how my strategy works for looking for that squeeze, that MACD cross, and that trade line VWAP crossover, there wasn't really any trades that I liked today. So I know for the past 3 days there has been a really good trades to make using my strategy. But to be honest, today there was no trades that I liked at all. So yeah, I didn't have any trades on the day. So it's gonna be, I really don't have anything to talk about or that I want to show you. I mean, today it was just all about this narrative here with the S&P 500 reaching down to its 200-day moving average. And I will show you the Qs, the Nasdaq here. As you see, the Qs too, they started literally this moonshot in the overall market started right here with the Qs bouncing right off that 200-day moving average. So yeah, that's pretty much what happened today. Not really any good trades to talk about, any options trades or any small cap short squeezes or anything like that. So yeah, we're gonna wrap that up and move on to some tweets I found interesting. To be honest, I didn't really look at Twitter that much today, but I had a couple that I wanted to show. So this is a chart of the 30-year fixed U.S. mortgage rate jumping to 7.1%. So this is just a mortgage rate chart that I thought was interesting. Here we have 2022 being the highest number of Fed rate hikes in a single calendar year in history. And this is the bond market has now been in a drawdown for 31 months. By far the longest drawdown in U.S. history. So there's that. And now we're going to look to see what we have on the economic data front for the rest of the week. So tomorrow is Friday, March 3rd. And we get the ISM non-manufacturing PMI. So we have that to look forward to. And that's going to do it for today's video. Appreciate y'all watching, and I will talk to y'all later.